Everyone is watching the Strait of Hormuz. Almost nobody is talking about the Panama Canal, and they should be. This week Bloomberg reported that the Panama Canal is suspending some vessel bookings due to water level concerns. Two of the world's most critical shipping choke points are simultaneously disrupted. This is an extraordinary situation with real financial consequences for global trade and inflation. What the Panama Canal actually is. The Panama Canal connects the Atlantic and Pacific Oceans through a 51-mile waterway across Panama. It handles approximately 5% of global trade by value, including significant volumes of U.S. exports, Asian manufactured goods, and South American commodities. Ships crossing the canal save weeks of sailing compared to going around South America's Cape Horn. Why water levels matter. The canal uses a lock system that requires enormous amounts of fresh water to operate. That water comes from Gatun Lake, which depends on rainfall in the surrounding watershed. When rainfall is below average, the lake level falls. When the lake level falls, the canal must restrict the size and weight of ships it allows to transit. Fewer ships, smaller loads, higher shipping costs. The climate connection. Water shortage at the Panama Canal is not a random event. It follows record drought conditions in Panama, driven by El Niño weather patterns that climate scientists say are becoming more frequent and more severe. In late 2023 and early 2024, the canal experienced its worst restrictions in decades for the same reason. Now it is happening again. The inflation consequence of dual choke point disruption. When both the Strait of Hormuz and the Panama Canal face simultaneous disruption, global shipping costs rise sharply. Ships must take longer routes. Freight costs increase. Supply chains that depend on timely delivery face delays. These costs flow through to the price of goods in every store in every country. Dual choke point disruption is one of the clearest and most direct pathways to a consumer inflation shock. Why this matters for the Federal Reserve decision in 8 days. The Fed meets on July 28th and 29th, next week. The dual shipping crisis adds another inflationary signal to an already complex picture. Oil at $87 from Hormuz disruption. Shipping costs rising from Panama Canal restrictions. Both point in the same direction, higher prices for consumers. The probability of rate cuts in 2026 is falling with every new disruption headline.